S&P today punched above its record close of 2190. It's since pulled back 2188 or so. But, you know, we did it once this month. You think we can do it again?
Hi, Ramey. Yeah, of course we can do it again. You know, you're looking at a market right now that has really become overly complacent. Volatility at new lows, S&P at new highs. I mean, at some point, forget about emotion, forget about anything else that you would think about. At some point, those have to come back in a little bit together. So, sure, we can go up to 2205. There's no limit to how far we can go, but I think the power in which you'll see will not be very good if it continues to the upside. I think with the low volatility and the high S&P, you're going to see more of a convergence back the other way for a little while.
Right. You know, Todd, earnings season is just about over. What data are you looking forward to in the next few weeks or so before the official start of fall comes in after Labor Day?
Well, I think when you just looked at, you heard Bullard last week, you heard Lockhart last week, there's Jackson Hole on Friday.
Right.
So if they're really serious about raising rates, which I think there is no idea that they're going to raise rates, I would think that, you know, it's going to be, that would be the information you're looking for. But I'm looking to get short the market here. I think that again, because of the volatility and because of where we are, I think there's a better chance to work its way back down. So what I'd like to do is I'd like to go ahead and put on a spider trade, SPY, and I want to put it on the put side. I want to give myself an opportunity to make money on either side of the trade with also collecting some premium. So I'm going to use what we call a ratio spread in the spiders. I'm going to sell 5 218 puts in September 16th. I'm going to buy 6 217. I can do that for a net credit of about 70 cents. So if the market continues higher, I get to keep the credit. If the market goes way down, I end up being net short the market. The only way I can get hurt if it stays right here in the middle, but I think we'll either move significantly higher, but I really believe we're going to move significantly lower, which makes this trade unlimited reward if it goes down.
All right. And looking ahead, you just mentioned Jackson Hole. Of course, all eyes will be on that when Fed Chair Yellen speaks then. Any thoughts as to where she might go? We've got some dovish comments. We've got some recent, of course, bullish comments, especially from Fisher this past Sunday, right?
Well, I think the hawkish comments are really to contain the market from going too much further here. Seriously, I think there's no way that we're going to see an interest rate hike before the election. I think the election has got enough of its own stuff going in, and I don't think that they will raise rates going into it. So end of the year, possibly, but I think that's more of lip service right now. I think Yellen will remain that we're going to be data dependent, and we're not ready to raise rates yet. We haven't met our inflation target, which, you know, I'm paying more for food and gas. I don't understand inflation.